GM, GM. Thursday. Today is the 7th of March, 2024. Let's take a look at what's been going on. So, another solid day of ETF flows yesterday. Lower selling on Grayscale. Grayscale selling dropped down to 276 million. And BlackRock has taken in another 280, so matching Grayscale again, offsetting it. And then every other issuer either had an inflow or was flat. So no outflows, which we had seen some outflows in previous days from some of the other ETFs. But overall, another 330 million net flying in. That is what? That is still 5 to 6 times as much as is the new issuance. So strong, sustained demand from the ETFs. Now into the charts. I think on low time frames, it's going to consolidate and eventually break out of this sort of consolidation pattern that it's been in. You can see it here following roughly into a sort of a pennant type of setup. But there's not a massive buildup of open interest. This move off the lows has predominantly been spot led. And so I would expect that we probably make a move up, dip back, and then have a go at all-time high. From there, maybe it goes in the first try, maybe it's the second try. I also don't know if it's going to break out or if it's going to, with all this gap left behind, if we don't come back below, 64, whatever, maybe it'll top out there and we'll go for a deeper sell-off for some reaccumulation before a proper crack at it. It all depends. There's nothing to say that Bitcoin has to break all-time highs and hold on this push. A lot of people talk about the 4-year cycle. We're obviously way, way ahead of where we normally would be. This is only March of the halving year. And typically in March of the halving year, we are nowhere near all-time highs. So March of 2020, don't need to tell you where we were in March of 2020. March of 2016, doesn't have it here, but we were nowhere near the halving, or nowhere near the all-time high, sorry. We didn't touch all-time high till December. Whole shorter cycle theory, all that kind of stuff. That might be valid, might not, but the main thing is Bitcoin's well ahead of schedule. So if it stops and slows down and doesn't go higher, that wouldn't surprise me either. What you want to watch is Bitcoin dominance. And I was taking a look at it this morning. Back in 2018 until 2020, Bitcoin had its main dominance run. I said like wave one here, meaning from when the bands went green until they turned red up here. I consider all that to be a single wave of dominance. There was a slight period in between where they flipped red, but obviously the trend didn't reverse. So this full wave from green to green, not from bottom to top. You could measure it from bottom to top, but that is, you didn't know this was the bottom at the time. You didn't know this was the top at the time. What you did know is that when the band started to turn green, that's a sign, obviously, that it's trending up. And so that was 560 days, 80 weeks. Currently, we're 420 days in, so we're about 60 weeks in. By that logic, you could see possibly another 20 weeks of Bitcoin outperformance. The dominance run has not been as strong, which is normal too, because a lot of this was occurring during a bear market, right? So there's some differences here. This was June into, from June into the start of 2019, was still a brutal bear. So Bitcoin's dominance rose a lot during that phase. But this move has been all within a bull market, right? So the bottom came in November 22 with FTX collapse. And everything that Bitcoin's been trending up has been also the market trending up in dollar terms. So some real differences between this cycle and last cycle, which you'd expect, because no two cycles ever play out the same. But taking this as a starting point, we could see Bitcoin dominance top possibly in July, which would be after the halving. I don't know if that's going to happen. We could well be topping out now. I do think there's another push to come, but The way the market really moves is whichever side is overrepresented tends to get faded. So to me, that means a lot of focus has gone back onto Bitcoin over the past few weeks, and rightly so, as Bitcoin has moved towards its all time highs and touched all time high. And of course, you got the ETFs, which is a totally separate source of demand. So this is going to look different to last cycle. The money that flows in 2018, 19, 20, the money that was flowing in had to choose between Bitcoin or altcoins, and hence why Bitcoin could go on such a big dominance run. This time, there's money flowing into Bitcoin from external sources, but money can also flow in to the alts. So it might look like Bitcoin dominance is sort of underperforming, but it's not really. It just means that a lot of the crypto native money, right, me and you and all the people that have been around and trading in crypto for a while, we're just putting our money back in, right? And if we're putting our money back into alts, it doesn't mean Bitcoin has to suffer anymore, because there's a whole TradFi level of flows that are coming in which are not, they don't care about alts. It's just money. It's brand new capital on the sidelines that's flowing in. So that in itself is good. That changes the dynamic. That's where you could see, for example, Bitcoin dominance doesn't rise that much, but Bitcoin still goes up a lot and altcoins go up on balance. I don't know if you need to see like a Bitcoin dominance nuke to have an alt season. We're already seeing an alt season, of course. We're already seeing alts go crazy. A lot of people, I think, are sitting waiting around for this. Like, wait till you see this big, real alt season. But if Bitcoin dominance doesn't go that high, there's not going to be as big a drop off, right? We had two big impulsive waves of dominance. This one's just been a more steady rise for Bitcoin itself. So I would throw most of this Bitcoin dominance, throw most of the old mental frameworks you had out the window. I think this chart will continue to at least hold, if not strengthen, because if you just think of it in terms of pure flows, there are 1 to 3 to 5, sometimes 700 million of net inflows a day into Bitcoin. On average, you're somewhere around 250 million of new flows every day between Monday and Friday when the stock market's open. There's not that much flowing into alts, right? There are not hundreds of millions coming in every day into altcoins. If you look at the stablecoin market cap, it's just trending up steadily every single day. At the moment, we are seeing quite a rapid increase. And let's say since the start of this year, we've seen, let's go to the 1st of January, we've seen 13 billion flow into altcoins, or sorry, not into altcoins, into the market since the start of the year. Now, a lot of that will go to Bitcoin. Yeah, people putting their stables in. They're certainly not just going to buy altcoins; they will buy Bitcoin. And you'd imagine the percentages are roughly similar. If Bitcoin is 54% of the total market cap, you could estimate that approximately half of these new flows of stables will go into Bitcoin. So that would be, let's call it 6 billion or 7 billion. So let's say you've had 7 billion flow into altcoins in the past. How many days have we had in 2024 so far? About 66 days. Is that about right? From the 1st to today? Yeah, 66 days. How are we 66 days into the year already? Wow. That's 106 million per day, right? I've just calculated there. 106 million, roughly 106 million per day flowing in, of stables flowing in, and about the same or slightly more, maybe 110 million a day into Bitcoin. So understand the logic there. If there's alt flowing in, it's going to find its way into the market and into coins. It obviously doesn't work like this exactly. There is not, if stables come in, they don't just automatically go into coins and stay in there. But it does show, if this is rising, it shows people are putting their money back in, their stablecoin market cap is rising. So it's either going to be in coins, in stables, maybe farming on some DeFi protocols, being used on centralized exchanges as collateral. So it doesn't directly flow into alts, but we're just estimating here. I would say roughly half goes to Bitcoin, at least at the moment. If half is going to alts, that means you've got maybe 110 mil a day going into Bitcoin, maybe 106 going into alts. And then you've also got the 2 or 250 going into Bitcoin from the ETFs, which is not included here. So you could still have maybe a 4-to-1 ratio, right? If we say there's 250 mil as well a day into BTC from ETFs, that's giving you what, about 360 mil into Bitcoin and 106 mil into alts, right? Roughly, 75% of all the flows coming in are going into Bitcoin, about 25% into alts. So over time, that will change. Over time, the altcoin market will appreciate more because it's smaller. It has less work to do in terms of percentage change to rise. It's less liquid. It's easier to move. So we're seeing that, and I would say that's a fairly good rough estimation. I'm looking at this and thinking, is Bitcoin going to break out soon, or is it going to spend some time consolidating up here? If you look at the difference of the market pre and post, you can put the stablecoin flows on, or sorry, the CVD on, and look at Bitcoin pre and post nuke. Go to the 4-hour chart, and we look at, first of all, the move up from the very, very low after the ETFs until this 62K or 64K spike. In that first push, the OI on Bitcoin went up by around 59%, as price went up about 66%. The numbers don't need to be perfectly accurate, but if price is outpacing the rise of open interest, it's generally a spot-led market. Now we know that, I've just shown the stablecoin flows and the ETF flows are positive, and all the way along here, we've had this just constant spot positive CVD. Obviously, stablecoin CVD has been positive as well, but there are key periods in between where it's not. There's periods here where the CVD on spot was flat, if not slightly rising, and stables was down. There was a lot of shorting going on, as you can see that. They got squeezed out. Same in here. When CVD on spot was rising, you can see it declining, right? So along here, there was still strong spot bid for those week or two, as there was negative on the futures. That's all in the past. We know this now. We know from the move of 51 to 64 and then on up to all-time high. We know a lot of that was a short squeeze. Then it flipped to the point where the open interest started to outpace the price of Bitcoin. So after that first squeeze out here, where you saw the drop off, so from the very lows of this, where all the shorts got squeezed out and a few longs got taken out, up into the all-time high, there was a 32% increase in Bitcoin open interest, and there was only a 18% increase in price. So almost double. It was outpacing it by almost two times, meaning a lot more of the move was being driven by open interest, and price was not respecting it. Why does this matter? Because if open interest is rising at a faster pace than price, it's telling you that more positions are opening, but price is not going up as much. If it was still matching what it had been doing before, you'd expect Bitcoin's price to have gone up by about 32 to 35, right? That would be if we were still spot led all the way there. So you would have seen Bitcoin's price being at about 80K if that amount of open interest was still predominantly neutral and being spot led. It wasn't. We flushed it out, as you can see. Got a big flush back all the way right back to exactly where it was before. So this little phase here, from the first push to the all-time high, the price, flushed back, and the open interest dropped down. It bottomed out at 14.2, bottomed out again at 16, so took out the majority of it. And now, if we go to a lower time frame, go to a 1 hour, start to get a bit more granular on it. Since the bottom of this nuke, price is up to right now, it's currently up 13%. And open interest since the very bottom of that is up 9%. So we're back to where we were before, which is just by this measure, and this is only one measure, but we're back to a healthier market again, where Bitcoin's price is rising more than the open interest. That would tell you that there's not an excess of positions. And remember, open interest is longs and shorts, but the reason why you can estimate that it's predominantly going to be longs that are directional is because Bitcoin is at all-time high. Everyone's trying to get long. No one's really trying to get short. Of course, there are people shorting it because they think, oh, all-time high, it's going to reject. There's always going to be people shorting. But you'd have to be a fool to think that the majority of people are not trying to get long. Of course they're trying to get long. But they've opted to get long mostly through spot, and there's always some leverage on futures. But if you're looking for what you want to see this. You want to see price percentage outpacing open interest, which we're seeing. That's good. This doesn't include the CME futures, which you can account for as well. But for the crypto native market, right, all the exchanges, Binance, Bybit, etc., we're seeing a healthy market again. If you start to see Bitcoin, right, especially if we push to all-time high, if we push to 72, let's say, you don't want to see open interest start to really outpace it, right? If it went to 72 and Bitcoin's price is up then 21% from the lows, but you're just seeing this massive ramp up of open interest to where it's up 25 or 27 or 30%, that's again where you're looking at this leg being mostly futures led. So we need to wait for that to happen. Right now it looks healthy. Everything looks good from that perspective. And on the low time frame since the bottom, you can see nice positive slope on spot CVD. Future CVD basically flat, slightly positive, but there's not a big push coming from the futures, which is what you want to see. So predominantly a spot-led market, no big overabundance of open interest building up. That doesn't account though for altcoins. Altcoins are running hot still. Funding rates are still high, not as high as they have been. We've really seen a cool off in them. Exclude the odd meme coin like WIF or Fetch, which isn't a meme coin by the way. Fetch is at 0.24, but it's at you can't get long Fetch here. It's just far too high in the short term. SHIB still at 0.34. But the majority of them, if you remember the other day, every one of these was at 0.1, 0.2, 0.3. Bitcoin's back to this is like neutral for Bitcoin now. 0.03, it's obviously high funding, but it was at 0.1 just a few days ago. And the more important thing is that across the market, you're seeing a big cool off in a lot of these coins. So that's good. That's exactly what you want to see. And to me, is it healthy? That's always subjective. But the fact that it's came down so much, where if you look at the aggregated funding just across the entire market, the drop off in aggregated funding is really, really, really good, right? We were super hot, running really hot a few days ago. It's dropped right back to below where it was. Like it's back to levels from the 25th of February. Yeah. So of course it's not at neutral, but it's certainly nowhere near as frothy as it had been in the past couple of weeks. If price starts to trend up again, keep an eye on that. Overall, looking good, market healthy, and I like where it's at. I would still lean towards this being a consolidation after a leg up, a consolidation before a breakout. The question is, does that breakout hold? If it doesn't, of course, we're looking at that 60 to 62K level, where there should be some real strong spot demand. Anything in between is sort of no man's land. Anything in here is kind of, anyone's guess. But I think the way it's compressing and squeezing, it's going to go for the highs, and we'll see from there. So that's it. GM. See you all later on the live stream. Purple Belt will be launching today. GM to that. Going to promote some Purple Belts. And winner of the trading competition for February is going to be announced as well. The results are now in. GM, GM, GM.